What's up everyone, it's Scotty with Money Vesting. So markets here really just trading sideways and not really going anywhere. The Dow Jones and the S&P 500 slightly higher and the Nasdaq was slightly lower on the day. But of course, a lot of big tech companies, big tech stocks, they were selling off. So I want to take this opportunity and really help you understand some of the drop parameters that we have in the markets, because there still seems to be a little bit of a confusion. So I want to help you better understand, give you a bird's eye view of where we are and what are some of those drop parameters. And I'm only going to say this once because there's been a lot of confusion, misconceptions about these. And I will also help you understand what some of the most famous phrases actually mean in the market. So I hope you guys enjoyed this video, find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. Link to our Discord and Patreon is going to be down below if you're interested in joining us, and of course getting access to all the buy and sell alerts, options alerts, trade ideas, a lot of the private videos and tutorials and educational content, as well as our intrinsic values on a lot of individual stocks as well. So link's going to be down below. So this right here was a state of the market. The Dow Jones rallying over 41 points, S&P up over 0.03%, and the Nasdaq here down over 12 basis points. We were back and forth here on the day very much, and we did have over 3,100 stocks advancing on the day, with a little bit under 3,000 stocks declining on the day as well. This right here again was your big tech FANG stocks, so Meta, Nvidia, Netflix all dropping a little bit over 2%. Tesla here continuing on that sell-off. Even after hours, unfortunately, it is down a little bit close to 1%. So overall, down 2% on the day. Microsoft down, Apple down, and we did have Amazon, AMD, and Google just barely green. But the most important piece with this is the technicals, the 21 EMAs, and where are we sitting with that uptrend, because almost all stocks right now that are on this list right now in front of us have been or are in an uptrend, but that could change very quickly. And that's where our drop parameters come in, and something that I have tried to talk about time and time again during our live streams. I've mentioned this on our Discord many times over, but let's just look at it from a actual percentage basis. When I am referring to a pullback or a dip, okay, when I say in my videos that there could be a pullback or there could be a dip, we're talking about 2 to 5%, okay? That's what we're talking about. And that means that the uptrend would still be intact. We would still be in an uptrend, and we would only see a 2 to 5% pullback or a dip. At least that's what my expectation is, okay? That's what we're talking about. When we mention correction, the word correction, that's when we're talking about 5 to 10% or more. And that means an uptrend gets broken, okay? So we've been making higher highs and higher lows. We've been going into this uptrend. A correction would result in a 5 to 10% or more breakdown and a sell-off and a breakdown below those technical levels, which means the uptrend would be broken. A bear market is what we experienced last year in 2022. That would be a sell-off of 20% or more. And that would basically represent a downtrend, which is intact. And we're making lower highs and lower lows, similar to what we witnessed and experienced in 2022. And then, of course, a crash. I don't think I've used that word ever, but some people like to put words in my mouth, but I've never used that word. A crash would be 50% or more, which would be an aggressive downtrend. You can just kind of really just visualize what that would look like if the S&P or the Nasdaq would be down 50% or more. Of course, great financial crisis. We had a crash, dot-com bubble. We had a crash, but COVID, we did not have a crash. Bear market of 2022, we did not have a crash. We were stopped out during this bear market phase. Now, the same is also true when we are in a downtrend. So let's say that we are already in this bear market. We are down 20% or more. There's a downtrend that is intact. And if we do get a reversal, if we do get a dead cat bounce, that would only be a 2 to 5% rally. So we are in a downtrend. We're making lower highs and lower lows. We see a 2 to 5% move higher. That is what I would consider to be a dead cat bounce, because it is happening in a downtrend. It is happening in the context of a downtrend, which is still intact. In order for this downtrend to be broken is what we call a reversal. A reversal would be a change in direction. It would be a trend reversal, and that would mean a 5 to 10% or more move to the upside, breaking out of those technical levels, and that would be a downtrend which is broken, similar to what a correction looks like on an uptrend. Where an uptrend is broken, that's what it is for a reversal when a downtrend is broken. Now, of course, if you want to be more specific, it's called an upside reversal, and this right here would be called a downside reversal, but we're going to keep things here. Reversal to the upside, 5 to 10% or more, where a downtrend is broken. Now, bull market is 20% or more, so uptrend is intact. And of course, I've kind of, created this myself. To the moon would be 50% or more, which would be a very aggressive uptrend. It would be a very consistent move to the upside, with obviously some dips and some pullbacks thrown in the mix. So now, one of the most famous phrases you may have heard is buy the dip. Okay, I want to be very clear and what this means. Buy the dip does not happen during a dead cat bounce. When you are in a downtrend and we're seeing a little bit of a rally, that's not what it is. A dead cat, a buy the dip also doesn't happen in a bear market. Buy the dip, it does not happen in a correction. Buy the dip does not happen in a crash, because then these are called catching the falling knife, because markets are still weak, they're still selling off, there's no signs of a reversal, and you are buying into a correction or a bear market or a crash. Now, again, you might get some discounts, you might get a lot of value, you might get a lot of opportunities in those times when the markets are down 20% or more, or even 50% or more. Then feel free, obviously you can dollar cost average, but just remember that's not really buying the dip. Buying the dip happens in an uptrend when the markets are already making higher highs and higher lows, and we get that pullback, we get that dip that we're looking for, hence buying the dip during that 2 to 5% pullback. Another famous phrase you may have heard of is sell the dead cat bounce, right? Sell the dead cat bounce happens in a downtrend and you get a little bit of a relief rally. That's the dead cat bounce. Again, happens in the context of a downtrend, making lower highs and lower lows, and the markets do see a move higher of 2 to 5%. Where are we currently in all these drop parameters? Where are we at the moment? As of today, where are we sitting? So this is the current status of the market. So current status of the market, we are in an uptrend, and we are expected to see a pullback or a dip. That's where we are. So I want to be very clear in my assumption and my analysis and my expression of where we are. We're in an uptrend, as I mentioned before. The S&P, the NASDAQ, they've been making higher highs and higher lows, very, very nice moves to the upside. And right now, all we're witnessing is a small pullback and a dip. Now, can this turn into a correction of 5 to 10% or more with an uptrend getting broken? Sure, it can, right? But that's what we have to analyze, and that's what we have to assess. But right now, as it stands, we're in an uptrend, which is still intact, and we're seeing a pullback and a dip of 2 to 5%. I'll go over some of the technicals here in just a minute. You know what? I should just go over it right now because it's fresh in our mind. So if you come over to the S&P 500, you can see that we are in a consistent uptrend. It's very easy to visualize. It's not rocket science, folks. We're making higher highs, we're making higher lows, we're in a very nice uptrend. And the 21 EMA, the black line you see on the chart, has been a very nice validated support for the S&P. So if you do see a pullback and a dip, I wouldn't be surprised for the S&P to see another 1.6, 1.7% pullback down to this 21 EMA, which sits at 44.50. And from our recent highs of 45.77, you notice that we will be down over 2.65%, which is very much within our 2 to 5% range of what we consider a pullback or a dip. So that is literally what we've been talking about on the channel. And the NASDAQ here, again, you can see very nice, consistent uptrend, making higher highs, making higher lows. It is moving higher in the right direction. And right now what we're witnessing is a little bit of a pullback. So from our recent highs of 14,450, it would be a drop of about 4%, 3.98 to be precise. You can see that literally right there, which again is within the range of our 2 to 5% parameter of what we consider a pullback or a dip. And that would be that 21 EMA sitting at 13,870. Now, the moment we break down below this 21 EMA, okay? The moment we break down below these moving averages is when things could start to get a little bit more interesting, okay? That's when we start to break down below this pullback and dip parameter and kind of move down one tier over to potentially a correction territory where we're looking at maybe 5 to 10% or more from the market. And this is the current status of the market. Remember 2022, we were in a full-blown bear market, and then we saw a dead cat bounce 2 to 5%. Then the downtrend got broken with some technical levels getting broken. We broke out of certain resistance levels. We saw a resistance, and then we saw a bull market, which is what we have witnessed in 2023 so far. Okay, so it's not just on the way down; it's also on the way up. We saw a nice reversal. We saw a nice bull market. We saw very nice dead cat bounces and some rallies in 2023. But the current status, of course, after this rally that we've seen is where we are right now, which is a pullback and a dip. So that is something to keep in mind. And a lot of it is going to depend on a lot of these individual stocks and how they end up performing. So for example, Apple, you can see a very nice consistent uptrend, as I've already pointed out in one of my other videos, validating and respecting its 21 EMA time and time again, and right now coming down to its 21 EMA, sitting roughly at 189. And from its recent highs, actually all-time highs, it is down a little bit over 3.28%. Down to that 21 EMA, it would be down a little bit over 4%. So that would be a pullback or a dip. But of course, if you do break down below this level, then we have to be careful. Amazon, same thing. It perfectly validated. In fact, it is sitting above its 21 EMA right now, as you can see perfectly. And from its recent highs, it is down a little bit over 5%. So again, a reasonable pullback and a dip for Amazon. If we break down next week below that 21 EMA, then we have to be careful, as I've already mentioned. Tesla, unfortunately, already broke down. So you can see that we were trading above this 21 EMA for the longest time. Perfect validation here back in June. And then, of course, the earnings came out. We broke down today. We weren't able to trade back above that level. So you can see that we were trying to break above this level, that 21 EMA at 267.94, so 268. And the high for the day, 268 on the dot. So we got rejected, and then we sold off even further. After hours, we're down even more, 88 basis points down to 257. And from its highs, we are now down a little bit over 13%. So Tesla is already in correction. So Apple and Amazon are in a pullback. Tesla is already in a correction. Let's go over to NVIDIA. NVIDIA also coming down to its 21 EMA. Still, the uptrend is intact. The uptrend is still intact, validating that 21 EMA. And of course, right now, it would be down a little bit over 8.7%. So it would be almost in a correction territory, NVIDIA. Of course, if it does start to break down below this 21 EMA at 443, then maybe there is a higher chance that it pulls back even further, sells off even more, and ends up in a full-blown correction or even a bear market. But again, it's really important to kind of memorize these drop parameters. If you need to take a screenshot, feel free, but it will really help you in a better understanding on where we are, what percentage levels mean what, and what can be done, and what is the actual status of the market given the overall trend. So that's it. All right, that's very, very important stuff. Definitely make sure that you understand it well. So Dow ekes out a narrow gain Friday for 10 straight positive day, longest rally since 2017. So stocks were mixed Friday as traders assessed the latest corporate earnings results, and the 30 stock Dow climbed 2.51 points, so barely up on the day. And the S&P pushing higher slightly, and the Nasdaq was down 22 basis points. On the weekly basis, S&P added 69 basis points, Dow gained over 2%, and the Nasdaq fell 0.57% on the week as well. And corporate earnings have been mixed thus far. 75% of S&P 500 companies that have already reported have exceeded analyst expectations. I will be doing a separate video on the S&P 500 earnings. I will go over what the expectations are, and of course how we are doing so far with earnings season. And Barclays' Emmanuel Cao wrote, and I quote, "Overall, early Q2 results appear good enough for equity markets to grind higher for now. Next week will be more indicative of the broad earnings dynamics, with 50% of the market cap reporting as well." And a number of market signals are suggesting the broad market rally could hit a snag later this year. Credit Suisse mentioned that beyond a 3-month view, we would be much more cautious because, one, markets always make new lows going into a recession on average 11 months after it starts. The yield curve's senior loan officer survey, money supply are consistent with a recession, and the firm's global equity strategy basically said, and we are also fearing wage growth will be stickier, implying core service inflation in the US will rise, and hence the degree of rate cuts discounted by the markets in 2024 will not materialize unless there is a recession, which is really the motive, which is really the incentive the Federal Reserve needs to cut rates. And we know the jobs market's super, super tight. Equities may be overbought, but don't stop buying on legs down, Citi says, and there's little left to worry about in the markets in terms of impacts from an economic shift, according to Citi, and investors should now be wondering if stocks as a whole have been overbought. Equities are somewhat overstretched as the market enters a period of negative seasonality, and again, August, September is usually not the best months for the market. He warned in a note to clients. He said investors should be prepared to be patient, but also watch for any moves down, as it still could make for good times to buy in. And that's especially true considering excitement around artificial intelligence continues to build within the market as well. So NVIDIA, Meta, Tesla, Microsoft, Apple, American Express, Wells Fargo, a lot of these big tech companies selling off. Qualcomm was up, Texas Instruments were up, Intel was up. So some of the semiconductor stocks pushing higher. Healthcare, we did have energy, utilities, defensives, medical devices, restaurants pushing higher on the day. So again, a very, very mixed bag with utilities, healthcare, energy kind of outperforming. And we did have technology, services, financials, and industrials pulling back here on the day over the last 1 week. We still do have majority of stocks and sectors pushing higher with energy, healthcare, financial, utilities, defenses, but it's a different type of sectors, right? Technology, cyclicals, and comm services, your big tech here. Magnificent Seven, they're the ones underperforming now, and they're the ones selling off. However, over the last 1 month, we have still seen almost all sectors here push higher over the last 1 month. So all 11 sectors pushing higher. Orange juice, heating oil, gasoline, soybean, coffee, sugar, all pushing higher, with oats and natural gas and corn, canola, wheat all pulling back. And Bitcoin just a little bit under 30,000 again, and Ether just under 1,900 at the moment as well. Talking about crude oil, once again, we're starting to see a little bit of that momentum back higher, trading above $76 per barrel right now. And resistance, as we have already mentioned, is going to be close to $80, $81 per barrel for crude oil, and support level is going to stay put at $73, $74 per barrel. And right now we're seeing a lot of consolidation, so lots of sideways trading for crude oil at the moment. Talking about Bitcoin here, so BTC was basically trading sideways, so a little bit under 30,000 at the moment. So lots of consolidation for Bitcoin, and again, it's just been trading in that range with a resistance staying put at closer to 31, 32,000. All the way up to 34,500. And of course, support level is going to stay put roughly at 29,600 to as low as 28,300 for Bitcoin as well. Talking about Ether, just a little bit under 1,900. Again, just really consolidating sideways here. Resistance is going to be at 1,925 all the way up to as much as 2,025. That's exactly where we got rejected more recently. And support level is going to stay put at 1,837 for Ether as well. Now, going over to the market, and first of all, we're going to actually take a look at the S&P 500, and again, a very strong uptrend. This right here, again, is the pullback or the dip expected from the market. If it happens, great. It's going to give us an opportunity to maybe dollar cost average into some of the individual stocks that may represent some deals, or even some broader based ETFs and some other diversified funds. Because again, that's the goal with that is really just to be looking at dollar cost averaging opportunities and not really trying to time the market, but simply just trying to dollar cost average consistently over time. So support level is going to be that 21 EMA at 44.50. Even if it doesn't get down there, we'll continue to do that on a weekly basis. We'll continue to DCA into our VUG or VOO experiments that we have going on. So resistance is going to be all the way up to 46.25 for the S&P 500 as well. Talking about the NASDAQ, again, same thing, that 21 EMA and the support, which is a previous resistance sitting roughly at around 13,800. That's going to be the level to watch, and resistance, of course, all the way sits at 14,600 for the NASDAQ as well. And again, if you do see a breakdown below this level, then the next support is going to be 13,300, which is going to be a drop of a little bit over 8.5%. Again, could be a reasonable correction for the market. Again, we have to understand these drop parameters and what they mean for the market. Talking about Apple, even though I've already mentioned it, again, that 21 EMA, very, very important level. It's going to be sitting at 190. If Apple, again, for next week, for some reason, starts to break below this level, we have to be on our toes. We have to be kind of cautious and understanding of the fact that, okay, this could lead to a bigger potentially sell-off here of 6 to 7%, potentially coming down to 177 if there is any profit taking that takes place for these companies, because they've already rallied so much. And talking about Amazon kind of held up a little bit. Again, the validation on that 21 EMA was pretty strong today. But again, 129.96 is that level. And if you do see a breakdown, then unfortunately, I wouldn't be surprised to see a bigger potential correction for Amazon as well. Talking about Tesla, and Tesla here still struggling. As I mentioned in my yesterday's video and other Tesla videos, 240 is going to be that level. So this right here is going to be that support level to watch for Tesla. Very, very strong area of support and demand for the company. And right now we are again in a correction for Tesla, down over 15% after the earnings, breaking down below that 21 EMA. So I could see Tesla trade as low as $240. So that right there is going to be that support level to watch for Tesla. Talking a little bit about NVIDIA here, and NVIDIA coming down to its 21 EMA. So again, coming down to validate this support level once again. We'll find out next week if it continues to validate, or if you actually do see a breakdown below this support as well, and potentially get down to as low as $406, $407 per share. So those right there are going to be some levels to watch and of course pay attention to for NVIDIA. And of course the all-time high sits at 480, which is just an insane number considering that it's trading at 30 to 40 times sales at the moment. Advanced Micro Devices has already been trading below that uptrend, so it was again pushing higher very nicely, making higher highs and higher lows. And what we are witnessing right now is a consistent lower highs We did see some lower lows, but now it's really just trading sideways. So we're seeing a lot of consolidation, a lot of sideways trading for AMD. So support level is going to stay put at about $106, $107 per share for advanced micro devices. Resistance is going to stay put at close to about $130 for this company as well. Talking about PayPal and PayPal on the day, again, it is in an uptrend. So this is what I consider to be an uptrend, and a pullback right now is going to be a reasonable dip down to that 21 EMA or down to that support at close to $70, $71. And that's going to be a reasonable support level, and of course a dip or a pullback for PayPal to be watching, close to anything between $69 and $71. So that's going to be a very nice support. Right now we're getting rejected at that 200 simple moving average. We're still making some very nice higher highs for PayPal. So this is still an uptrend for the company. So a very nice pullback or a dip would be down to $69, $71. That's the range within which I could see PayPal come down to and revalidate and retest its support. Square, on the other hand, continues to be very weak. We've talked about how this is a bit more on the overbought side. So again, RSI MACD very overstretched, coming up to its resistance at $83, $84, down over 6% from its recent highs. Support level is going to stay put at $70, close to $71 per share for Square moving forward. And again, we're going to take a look at this from a fundamental standpoint. We've done several videos and analysis on Square, in other words, Block, but it hasn't really panned out because of the lack of profitability and the fact that Bitcoin revenue kind of really dominates the company's overall fundamentals, where the margins are incredibly low, and if not, they're losing money on Bitcoin revenue as well. Talking a little bit about Meta platforms, and Meta starting to break down here. So you can see, if I remove everything, what have we witnessed for Meta for the longest time? It's been consistently validating that 21 exponential moving average. So pushing higher, making higher highs, higher lows. And you can see that more recently, it is now starting to show signs of weakness, down over 9% from its recent highs. Meta is in correction. So we got Tesla and Meta are in correction. I repeat, all right, because I know there's going to be some confusion. Apple and Amazon are in a pullback and a dip. Nvidia, Meta, Tesla are in a correction. If that continues, if that accelerates to the downside, we got to be ready and prepared for what the NASDAQ might end up doing from a technical standpoint, might break down below its 21 EMA and potentially come down even further. So you cannot ignore these, because if you sleep on all this, I mean, then you're just kind of welcoming the sell-off in your own portfolio, right? That's why we hedge our positions, to protect ourselves from the potential downsides that may happen in the market. So going over to Netflix here, Netflix is also in a correction. I repeat, Netflix is also starting to break down here below 12%, below that 21 EMA to validate it. Now look what happened, right? Every time they broke down below the 21 EMA, we have seen a pretty sizable drop, right? This right here was a sell-off of a little bit over 21%. This right here was sell-off a little bit, another 11%. This right here, we're already coming off of a very, very parabolic move. So RSI MACD was already overbought, but as soon as we did drop, we dropped another 9% for the stock, right? So it is not, again, it's not crazy to assume that, okay, once these technical breakdowns do happen, there could be more potential downside for these individual stocks. So for Netflix, next support is going to be sitting roughly at around 410. That's going to be the next level, all the way down to as low as 380. So those are going to be some levels to watch. And Google here, already starting to trade sideways. So again, it was in a very strong uptrend, then started trading sideways, a lot of consolidation. This is very similar to AMD. So getting a bit of a rejection at that 21 EMA and the 121 levels. And next support really is going to be 115 for Google right here. So this right here is going to be that next support, all the way down to 109 for Google as well. Talking about Microsoft, and Microsoft is still in a pullback right now, still in a dip. It's only down 6%. So again, just about a pullback and a dip. A moment it breaks down below that 21 EMA is when I would or could consider Microsoft in a potential correction as well. And 322 is going to be that next support level to watch over here for Microsoft. And finally, we got Shopify, which again is validating that 21 EMA for now, down about 67% from its recent highs. And that 21 EMA is going to be that level to watch, and that supports in roughly at around 65.50. And of course, if we do see a breakdown below this, then the next support is going to be all the way down to $54, $55 per share. And finally, we got Enphase Energy, ENPH, and Enphase here really just trading sideways, still validating that 21 EMA. For the most part, it's been consolidating sideways. It's really just been trading in that range. As you can see, that resistance is going to stay put at 188, support level is going to stay put at 151, and we're just kind of trading sideways here. So that's going to be all for today. Hope you guys enjoyed this market update. And again, it's really important to understand those drop parameters, because that's really what dictates different percentage levels and, of course, how we end up moving in the markets from a more technical standpoint as well. So, hope you guys enjoyed this video, found it helpful. Make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. Link to our Discord and Patreon is going to be down below. As always, happy investing. I'll see you all in the next video.